Hey there, future Wall Street wizards. Ever wondered how companies like Apple or Amazon got so big? The stock market played a huge role. Think of it as a giant flea market, but instead of used furniture, you're buying and selling pieces of companies called stocks. When you buy stock, you're essentially buying a tiny slice of ownership in that company. The more slices or shares you own, the bigger your piece of the pie. And just like any good pie, you want a slice of one that's growing and becoming more valuable. This market, this exciting, fast-paced world, is where companies go to raise money to expand, develop new products, or hire brilliant minds like you one day. They sell off little pieces of themselves, stocks, to us, the investors. And that's where you come in. By buying and selling these stocks, you become a player in this global game, potentially growing your wealth along the way. Exciting, right? Let's dive in. Alright, time for a quick vocab lesson, Wall Street style. We gotta speak the language to play the game, right? First up, stocks. We hear it all the time, but what are they really? Simply put, a stock is a tiny piece of ownership in a company. Owning stock makes you a shareholder, part of the team. Shares are just how we measure these pieces of ownership. One share equals one slice of the pie. More shares, bigger slice. Simple as that. Now, the fun part, trading. This is where the buying and selling happens. You buy low, hoping the stock price goes up, then sell high, making a profit. Think of it like fantasy football, but with real money and hopefully better results. Master these basic terms, and you're well on your way to speaking fluent Wall Streeter. Don't worry, it'll become second nature in no time. So, how do these stock prices actually move? It's all about supply and demand, baby. Think of it like your favorite sneakers. Limited edition pair, high demand, price skyrockets. Everyone already has them. Low demand, price plummets. Same goes for stocks. Good news about a company, like record profits, gets investors excited. They want in. Demand goes up, pushing the stock price higher. Bad news. Investors get spooked, sell their shares, demand drops, and the price falls. Of course, there's a whole lot more to it, like economic factors, global events, even the weather. It's a complex dance, but understanding the basic steps is key to becoming a smooth operator on the trading floor. Feeling a little overwhelmed? Don't worry, even seasoned pros started somewhere. Just remember, buy low, sell high. Sounds simple, right? It is, in theory. Let's explore how to actually get started. Okay, eager beaver, ready to make your first trade? Hold your horses. Before you dive headfirst into the Wall Street mosh pit, let's get you properly equipped. First things first, open a brokerage account. Think of it like your online trading HQ. There are tons of options out there, each with different fees and features. Do your research. Find one that fits your needs and risk tolerance. Next up, funding that bad boy. Start small, especially when you're just learning the ropes. No need to bet the farm or your rent money. Remember, investing always involves risk. Only invest what you can afford to lose. Once your account is funded, it's time to pick your weapon of choice. Individual stocks or mutual funds. Individual stocks are like going all in on one horse race. High risk, high reward. Mutual funds are like betting on the whole field. Less risky but potentially lower returns. No matter which route you choose, remember, knowledge is power. Research companies, understand their business model, and track their performance before you hit that buy button. Remember, Rome wasn't built in a day, and neither are successful investment portfolios. Section 5. Picking your battles. Research is your secret weapon. Alright, rookies, listen up. This is where the real work begins. Picking winning stocks is like finding a needle in a haystack. But don't worry, I've got your back. The secret weapon: thorough research. First, identify your investing style. Are you a risk taker, chasing high-growth companies? Or do you prefer established, stable businesses? Knowing your risk tolerance is crucial. Next, dive deep into the companies that pique your interest. Read their annual reports. Yes, they can be dry, but they're gold mines of information. Analyze their financials and understand their competitive landscape. Don't just rely on hype or hot tips from your buddy's uncle's barber. Do your own homework. Look for companies with strong management, solid financials, and a competitive edge. Remember, you're not just buying a stock, you're investing in a company's future. This research takes time and effort, but trust me, it's worth it. The more you know, the better equipped you'll be to make informed decisions and navigate the market's twists and turns. Section 6. Danger Zones. Common traps for newbies. The stock market can be a minefield, especially for beginners. But fear not, my intrepid investors. Let's shine a light on some common pitfalls to avoid so you can dodge those landmines like a pro. First up, emotional trading. We've all been there. The market dips, fear sets in, and you panic sell, only to watch the stock rebound the next day. Ouch! Remember, keep a cool head. Don't let your emotions dictate your investment decisions. Next, beware of the get-rich-quick schemes. If it sounds too good to be true, it probably is. Building wealth through the stock market takes time, patience, and a whole lot of discipline. Don't fall for the hype. Another rookie mistake: overtrading. It's tempting to constantly tinker with your portfolio, but sometimes the best move is no move at all. Remember, every trade comes with fees. Make sure your trades are strategic, not driven by boredom or impatience. And finally, diversify. Don't put all your eggs in one basket, no matter how promising that basket may seem. Spread your investments across different sectors and asset classes to minimize risk. Section 7. Patience, young grasshopper. It's a marathon, not a sprint. Here's a hard truth about the stock market. It's a marathon, not a sprint. Don't expect to get rich overnight. Building wealth through investing takes time, discipline, and a long-term perspective. Remember those companies we talked about earlier? The Amazons and Apples of the world? They didn't become giants overnight. Their success was built over years of innovation, smart decisions, and yes, sometimes a little bit of luck. The same goes for your investment portfolio. Don't get discouraged by short-term fluctuations. Focus on the long game, ride out the dips, celebrate the highs, and stay the course. Remember, slow and steady wins the race. So take a deep breath, tune out the noise, and focus on your long-term goals. Investing is a journey, not a destination. Enjoy the ride. Section 8. Keep learning, keep growing. Your journey to market mastery. Congratulations, you've made it this far. You've learned the basics of the stock market, dipped your toes into the trading waters, and hopefully avoided some common pitfalls. But your journey to market mastery is far from over. The stock market is constantly evolving. New trends emerge, companies rise and fall, and the economic landscape shifts. To stay ahead of the curve, you need to be a lifelong learner. Read books, follow financial news, listen to podcasts, and attend webinars. The more you learn, the better equipped you'll be to make informed decisions and adapt to changing market conditions. Remember, knowledge is power. The more you know about the stock market, the more confident and successful you'll become as an investor. So, keep learning, keep growing, and never stop exploring the exciting world of finance. Section 9. Ready, set, trade, but smartly. Final words of wisdom. Well, my fellow investors in training, we've reached the end of our whirlwind tour of the stock market. You've learned the lingo, grasped the basics, and hopefully absorbed enough wisdom to avoid some rookie mistakes. Now it's time to put that knowledge into action. Remember, the stock market is a powerful tool for building wealth, but it's not a get-rich-quick scheme. It requires patience, discipline, and a commitment to lifelong learning. So, go forth, open that brokerage account, do your research, and start investing. But remember, invest wisely, manage your risk, and never be afraid to seek advice from experienced professionals. The stock market can be a wild ride, but with the right knowledge and approach, it can also be incredibly rewarding. Now go out there and make some money. And hey, if you ever hit it big, don't forget the little guy who helped you get started. Good luck and happy investing.